That's for y'all niggas. Fuck is you talking about? Not any of y'all niggas that's like, nah. But what's up, y'all? Liquidity part 2. Hopefully my screen is recording. Yep. Liquidity part 2. I just wanted to go over some more liquidity examples, like the best liquidity pools, and just overall how to spot it better and what you're looking at when you're on TradingView. You're trying to see what to target and what liquidity is important, and if you're going to target buy side versus if you're going to target sell side, right? So let's get right into it. Liquidity. Okay, so I'm going to go over the best liquidity targets in the whole entire market, which are equal highs and equal lows, right? What equal highs are and equal lows are when a previous high, right? This is in terms of equal highs. A previous high happens, right? You see it's an obvious previous high, and then let's say a couple minutes later, hours later, whatever, there's a high that comes in that's exactly at the same level of a high as that previous high. This is important because that just means the liquidity wasn't swept, and they're generating even more resting orders at that specific area. Because first, there's retail traders that are viewing that in the form of resistance, or viewing that in the form of, okay, if it bounces off this level, I'm shorting. And so that just means there's more orders generating, meaning there's more liquidity. And what does that mean? That the big banks, the market makers are going to target that area later due to the fact that their orders need to be filled, right? So let's try to look for some examples, right? Let's see if there's an equal high. There's an equal high, yeah, exactly right here. Okay. See if we have any exact equal highs. These are not really equal highs because they're not exact, so I want to find you guys a better example. Okay. Boom, right here, right? Okay, so yeah, if you guys want to use this indicator, it's free. It's on TradingView. Just press indicators and then type in equal highs and equal lows by algo. It's a pretty good indicator, I would say. Sometimes it doesn't really show you equal highs. Sometimes they're not completely equal, but it gives you an idea, right? So we have these equal highs right here, right? So why are these equal highs important? Because liquidity. To match this up with the last video, you guys have an understanding of what liquidity is and how orders need to get filled, right? Okay. So we have this level right here, right? Boom. High. And all the market wants to do is manipulate and take money away from people because other orders need to be filled and the big market movers have to make money. Okay, so we have this high at 4930. You could see the high where it says, right under where it says NASDAQ. Right where it says NASDAQ. Come on, bro. Let me move this. So right where it says NASDAQ, right under the 100 where it says H, it shows you the high, the level of the high right here, right? It says the high is 21493, right? And then it says this high, at this high is what? Where it says the H, 21493. So those are exact equal highs. This is important because that just means that this high was not swept, so it left those resting orders there without being taken out. And what do you know that resting orders means? That means there's stop losses there. That means there's entry points there. That means there's a bunch of money circulating in these areas, and it did not take out that high, so that added even more liquidity within the market at that specific level, right? So boom, we left equal highs. Now, since we left equal highs, we have a liquidity target now, right? So now you know that if the market leaves that area, you want to somewhat, if the narrative is if the narrative is adding up, which you guys will learn how to kind of create your narrative for the day. If the narrative is adding up and there's equal highs above, you know that's a perfect target to target once you learn how to enter in the market, right? So we have these equal highs. So boom, you could see clearly market left this up here. Boom, it went away. But since we have so many orders above, you know the market wants to target those areas first to take the retail traders out the market, have the money circulating, and just to target those areas, right? That doesn't make sense, but fuck it. So boom, you see left. Now what retail traders are thinking, and all the books are saying, and all the dumbass support resistance supply demand traders are saying, okay, boom, it left this area. Now if it bounces this area, I'm gonna short. Bounces this area, I'm gonna short, right? So boom. But us, since you're smart money traders and you're learning ICT concepts and you're learning from the GOAT Tradion, you know this is not an area that you want to enter off of. This is just an area of confluence, and it's an area of getting an understanding of the market, or an area to target if you get your entry model prior to it, right? So boom, we left this area, and you could see the market quickly targeted this area and swept out all those orders, leaving no room for any sort of dumbass retail trader to make money or anything like that, right? So we swept this, and then we continued higher because we had some significant highs up here, right? Which you could see got targeted right here, right? And you could see, once again, another perfect example. Even though these aren't exact equal highs, this high right here, this high right here, come on, this high right here and this high right here aren't exact equal highs, but this is what we call relative equal highs, right? It's a tier down from exact equal highs, but it's still significant because orders weren't swept, and it created more liquidity at those levels for the market to be targeted to. All right, so we left relative equal highs. We almost got to this level, but we didn't quite sweep it. We got to this level, boom. Okay, now you guys know what is there above now. There's resting liquidity, there's resting orders above those highs. So we know, even though we left this area, we don't want to go short. We don't want to basically take the under. We don't want to take any positions going down, right? Because we have liquidity above. And what is the market always targeting? Liquidity. Liquidity, liquidity, liquidity. It's the most important thing within the market. So since we left liquidity above, we know that we want to continue to that area, right? So we could see another point. Let's see if there's another. So boom. So we see that we left this area. So now, why so many retail traders fail is boom. Oh, I think this is a support zone. I think we're going to bounce off this. I think this is resistance. I think this is whatever I think this is supply zone. No, dickhead, that's not how it works. Don't fall for that bullshit. When you see somebody faking like they're making money based off fucking support and resistance, majority of the time, not all the time, because there's some niggas out here making money from that shit, but majority of the time, it is some bullshit. Do not fall for that shit, right? So we have relative equal highs. So now we know, okay, boom, I have a target. I have resting orders above. I know the market wants to target that because the market makers need their order filled. The market makers need a target. So, and they need their buy contracts to get sold. And if they're on the opposing side of the market, they need their sell contracts to get bought, right? So we know we have a lot of buy stops up here. We know we have a lot of sell limits up here. We have a lot of money circulating, right? So boom, we leave these relative equal highs, this high and this high. We leave these relative equal highs. We come down and kind of retrace, which I'll get into a little bit later. We come down, retrace, and then we know that we want to come back up to this area because relative equal highs, liquidity. I'm going to keep saying it. Liquidity, liquidity, liquidity. It's the most important thing that you cannot forget when you're trading. Everything is based on liquidity because these markets are just what? It's in order to make money. Everybody in the market is just trying to make money. And so we left this area, we came down here, and we know we cannot short, we cannot bet the under. We want to keep going up. So you could see, boom, we swept these areas. Now it's up. Now we officially swept liquidity, and now hopefully you got in order to target these areas of liquidity. And now that's just a pretty good explanation of equal highs and relative equal equal highs, right? And now we have the same thing on the other side of the market. Let me just show you guys another example of equal highs. These are almost exact highs right here. Boom. You could see equal highs, swept, right? Equal highs, targeted, relative equal highs. Boom. When it looks, let me give you guys a tip. When it looks too clean, when it looks, oh my gosh, these shits look like too hard. It's like, nah. Pause. They look like two kind of just clear highs. And then we have a high right here. It wasn't swept. We know we want to target those areas. You don't ever want to go in the opposing direction of something that is too clean. Right? Okay. Now, another form of liquidity. Now, this is just going to be so when you're looking at the other side of the market, it's the same exact thing. When you want to go short, you never want to, you always want to target some sort of liquidity to the downside. And equal lows work just as well as equal highs because it's the same thing, just vice versa, right? So let me see if we have some perfect equal lows somewhere around this jump. Just, let's see. Come on, bro. Happy New Year's to y'all niggas too. Okay, boom. Right, we have these equal highs right here. Equal lows right here, right? You could see later. This is like, let's say this is from Tuesday at during New York PM session, right? Tuesday, December 24th, 2024, right? So we know that, let's say we came in on Friday morning session, New York session at 8 o'clock, right? 8 a.m. We came in. We see this equal lows down here. This is a little more advanced because this is not something you easily see when you first start. Just because I know I've been there, I've been in your shoes. You're not used to the brain, the muscle memory of, okay, we have equal lows below. I want that target, right? So we have these equal lows, right? We left these from on Tuesday, and we know at one point we want to target these lows, right? You never want to be bullish. If you see something like this, these significant equal lows, especially on a higher time frame, like the 15-minute, the hour, that puts me into another topic. Higher time frame liquidity is always key, right? I'm sure Zay will be going over that in the time frames video. Hopefully, if he didn't, I'll smack the shit on him. But so we have higher time frames, right? When we have higher time frame liquidity and we have equal lows, let's say I'm on the 15-minute right now, right? We have liquidity on the higher time frame, 15-minute, the hour, the 4-hour. That liquidity will always trump any sort of lower time frame liquidity. So like if we have equal lows on the 15-minute, that's going to be more important than liquidity on the 1 minute, 2 minute, 3 minute. Even though that 1 minute, 2 minute, 3 minute could still be important, that 15-minute will be more important because it's just a higher time frame. It just means more to the overall narrative of where the market is drawing to. As you could see, we left these equal lows. Price obviously, once it finished throughout that overnight session and that next day, it kept wanting to go down, right? It turned into a bearish market structure, right? I'm sure Zay explained market structure to you guys. You guys could see that bearish market structure started forming. Boom. And on Friday, by the end of the week, it ran to those equal lows. It didn't waste any time to get to these equal lows. Boom. Ran there. And in 15 minutes, dropped over, see how many points that is. In 15 minutes, dropped like 150 points or whatever, right? Because liquidity is important. Those sell orders need to get filled. Those buy orders need to get filled. Whatever side of the market you're on, liquidity. Okay, now another form of liquidity that's obviously important is these niggas, I'm drunk, boy. I'm high, boy. It's like, no. Don't smoke weed. If you do, you're a dickhead. You're dumb as shit. Stop smoking weed, my nigga. There's no point in smoking weed if you're not rich. Anyways, so we have obvious lows that, let's say I took a step back, right? like some James Harden shit, right? I'm 10 feet away from my computer, right? I see a low that I could spot all the way back there in that kitchen, right? Like this one. Those are significant liquidity points. Those are where there's a lot of stop losses. There's a lot of entry points. There's a lot of money in those areas because it just is such an obvious low, right? So since we see this obvious ass low, we know once the market is showing us it wants to be bearish, that's a good area to target, right? You see this huge low right here, right? You're like, okay, is that a low on the hour as well? On the hourly? Yes. It's a huge low. It's an obvious low. Like we could see that market wants to come down here. You see that it's giving us like a huge BBC candle. Pause. It's giving us a huge black candle, right? HBC, right? Huge black candle, right? BBC, big black candle, right? That's the only way to mean BBC, right? Big black candle, right? So we see the BBC and we know that, okay, the market is showing us some a huge bearish market. It's showing us bearish price action. It's showing the market wants to go down. So let's say I'm in the market at this point where it gives us the BBC, right? It gives us a big, huge BBC, right? And so I know since it gave me a big, let me stop. Since it gave us a big black candle, right? It's telling me, okay, market structure is showing me bearish. So what can I target to the downside? Let me take a step back, James Harden, and see that, okay, we have this big ass low that I could see from 10 feet away. That's an obvious target. That's an obvious point of liquidity. So I know that the market wants to target that area, right? Boom. Now let me see. Boom. So this is, am I on market replay? Let me turn that shit off. Okay, so now, even though it hasn't got hit yet, now I know coming into next week or coming into after New Year's, once it hits 6 p.m. because the market opens back up at 6 p.m., I know I see another, I could step back, see this low right here. I bet you when this video drops, you guys will see that the, what is it? Friday the 20th, December 20th, the 7 p.m. 1 hour candle will be targeted by the time you guys see this video, because I know that there's a lot of resting orders below this liquidity because there's people that are viewing this as some sort of support, some sort of supply demand bullshit, some sort, I'm sure you guys have heard of it. Like, oh, this is a zone. This is a zone that price will bounce off of. No, dickhead, you're about to get your shit cooked, nigga. Like this. Hold on, I think. Oh, I didn't want people coming in. But so yeah, you see, okay, this is the area that I could target, right? So now when you come into the market, you know you want to target something down. You want to take that under. You want to take that sell. You want to take that sell order. Once you guys learn how to enter the market, right? I haven't taught you guys how to enter the market, but once you understand how you're entering the market, you know that you want to target something below. And since you could see, okay, there's an obvious point of liquidity, there's an obvious wick standing out, there's something obvious that is standing out, I want to target that area. So I don't want to take any buys for specifically for this example. I don't want to take any buys. I don't want to take anything going down. I want to take something to that area, right? I want to take a short, right? Okay. So now that should make sense. Now let's go over buy side versus sell side, right? Okay, buy side versus sell side liquidity. Sell side is always the lows, the significant lows, like I pointed out. Sell side, because this is the sell side of the market. This is if you're selling, that is sell side targets, right? Because sell side, you're targeting sell side targets, because if you're selling, you're on the sell side of the market. Versus buy side is just the vice versa. So those significant highs towards buy side, because if you're targeting those areas, it's buy side liquidity. If you're on the buy side, that's the liquidity you're going to be targeting. If you're buying, that's the liquidity you're going to be targeting, right? Let me sell side versus those highs. Oh shit, I'm tripping. Buy side, right? Sell side, buy side, right? It's obvious, right? So let's say I'm gonna give you guys a quick example. I want you guys to just answer this yourself, right? So out of this whole little kind of sample section of price action, I want you guys to show me at least three areas of sell side versus 3 areas of buy side liquidity, right? I'll give you guys like 5 seconds as I check my parlay. These niggas better be winning, my nigga. Oh, all right. Yo, what's up, my nigga? In 4th and 17. Yo, Texas should be whooping Arizona State ass, bro. What is going on, my nigga? 17-5, my nigga. These niggas, are you serious? All right, anyways, okay, boom. 3 areas of sell side. Okay, you see these equal lows. That's sell side, right? Swept it. Boom. The significant low, sell side. This is kind of not as noticeable, but another area of sell side. All right. Now, give me buy side. Buy side right there. Boom. Buy side. Boom. Buy. Yo, I do not like being I'm gonna have an apartment for the rest of my life, boy, because fuck a house, nigga. Anytime I hear some shit, I'm like, I want to kill myself. It's like, nah. But buy side, right? So you can see sell side down here. So whenever you hear the term sell side, you know that's downside. That's downside liquidity, and then buy side is upside liquidity, right? Just where the buyers are going to be targeting versus where the sellers are going to be targeting, right? Okay, now let's get a little bit more advanced when we're talking about liquidity, right? So, whenever we sweep some sort of significant buy side or sell side, now let me get in to give it more specificity, whatever the fuck, you know what I'm talking about. If we're in a sell side or a buy, let's say we want to buy, right? We never want to target a sell side after we just swept a significant form of sell side liquidity. Let me say it again. We never want to target a sell side area once we already swept a high time frame or a significant liquidity point of sell side. So let me give you guys an example. So boom, we see these lows, right? We see these relative equal lows right here, right? Okay, on December 10th, Tuesday, we swept these lows, right? We swept this low, we swept these equal lows. So we know a lot of stop losses got hit. A lot of sell stops got hit. A lot of people are buying those sell stops because if your stop loss gets hit, that means another person is buying that contract. There's support traders that are buying. So there's, like, let's say, to give you guys an example of support and resistance, a lot of people think, okay, I'm going to enter right when it taps this zone, right? They think, oh, I'm going to hit when this zone gets hit, I'm going to long. That's when you get cooked. That's when you get cooked. Let's say I entered, let's say, okay, on the 1 hour, we came down and hit this zone, right? We came down, hit this zone. I'm going to enter here, or I'm going to enter once it comes back in here, right? Boom, watch. Oh, we entered my zone. I'm going to long here, right? Let's say I'm a fucking over leverager. I buy 100 contracts let's 10, because niggas be out here buying 10 contracts and posting their fake ass P&L. Let's say, okay, boom. I'm a support and resistance trader. I'm about to buy 10 contracts, right? Boom. Fuck. Now that 100K Apex account down $800, you can only risk $3,000 in total. That's how much leverage they give you, basically, even though you shouldn't be risking $3,000. But let's say you want to full port your shit, right? Okay, damn, I'm down 800 already, but I'm still in that shit, boy. Fuck it. Okay, we see some sort of resistance. Let's go. Oh, fuck. Okay, I'm winning. I'm going to hold this. I think I'm about to make a bunch of money, right? Come on, my nigga. Show my example, my nigga. Fuck. Come on, my nigga. Boom. Fuck. Okay. Let's say I'm trying to make like a 1 to, because these niggas be trying to take like, let's see. I want to make a fucking, I need at least a 1 to 7. I need at least a 1 to 8. Because my win rate is so shitty because I trade support and resistance. I need at least this target up here because I only win 2 out of 10 times, right? Because we'll get into that later, but I need at least, okay, boom. Let's say your shit is at the bottom of this support zone, right? Damn, bruh. It came all the way back to my entry. I need a 1 to 8, bruh. Come on, hurry this shit up. Damn, bro, I'm down 4 racks. Stupid ass nigga, no. You just lost the account. Because what the fuck are you doing? You're trading support and resist. That's not how shit works, right? Okay, so that was just a quick example of how that shit doesn't work. But okay, boom, it swept back to my original point. It swept these lows, right? Since it swept these lows, you do not want to continue going short. You do not want to look for targets lower if we get a reaction based off that sell side liquidity, right? We get a reaction off that sell side liquidity. Let's say, boom. Okay, boom. I see that came down here. It wicked, right? It made a fat ass candle. It shows that there's buyers in the market. It shows that it's reacting off of this level. It swept this liquidity. It swept this liquidity. Now, since you know it's swept a bunch of sell side liquidity, what is it going to target? Buy side liquidity. So now I'm coming into the market. I'm like, I need to look for some buy side, because once it sweeps, my main point was once it sweeps some sort of sell side, it most likely wants to target some sort of buy side, right? If we target sell side and we sweep the sell side, it's giving you a strong reaction off of that sell side. We want to go up. We want to go to the buy side, vice versa. If we go buy side, we want to target some sort of sell side once that buy side is swept, right? Okay, boom, we swept sell side. So we do not want to continue targeting lower if it's showing us a strong reaction to this sell side targets, right? So boom, even though I could step back, see the low, right? I'm not going to target that area right now because I see that we're giving a reaction off of this sell side liquidity. I do not want to keep going short because we don't have to keep going lower because that sell side was swept. We have buyers in the market because all those sell stop orders, all those orders, all that money circling is being given to the other side of the market, the buyers, right? We want to go to buy side liquidity because now it seems like it's going to be somewhat of a bullish market. So now since we swept that liquidity, right, we want to target some sort of buy side. And that doesn't always have to be significant ass liquidity, but it should be your overall target. And you want to adjust the market of what it's telling you, right? So now we have this high, right? I don't remember if it gets hit, but it should get hit. We have this significant high. And so now we want to go down to that lower time frame and just mark out other forms of liquidity, right? I'll get into that in a second. We have all these other buy side liquidities, right? Let's get rid of this sell side. We swept all that buy side, right? So now, damn, that's a nice entry. Now we want to target these highs, right? These highs on the lower time frame. But let's just go, for the example, let's go back up to the 1 hour. So now we're in a buyer's market. So let's see what the market does. See? Boom. It targets buy side because all this sell side was just swept, right? All the stop losses. Because if you're in a buy order and you have your stop loss down here and you're in a fucking support and resistance, you put your stop loss, which is a sell stop. So that means if so many people are getting stopped out and they're buying, they're going long, right? That means when their idea is invalidated, that they're selling those contracts because you have to sell if you're buying something and then you get invalidated. that means someone has to be buying it from you. So once all those areas are invalidated, that means all those people that went long because they're fucking support and resistance traders, supply and demand traders, their stop loss is getting hit. Their retail traders are getting cooked. They're getting hit by that BBC, right? They get swept. They get the fuck up out of there. And then all the buyers come into the market. Boom. Now it's buying. Now it's going up. Buy side liquidity. We swept the sell side. We're going to buy side, right? Okay. Now vice versa. Now since you see, okay, now this is a good example right here. We see we swept this area. Or this is a better example. Once this, okay, boom. Hopefully this video is not too long. But so this is a perfect example of when not to kind of look for shorts when we swept some sort of buy side. So you could see, boom, we swept this buy side, right? Let's say we're in, let's say we go to this level, right? Boom. We finally take that buy side, right? 945, 955, 10 o'clock, that hourly candle closes. That hourly candle closes, let's say 15-minute candle, right? That 15-minute candle closes above that liquidity point, and we're not getting any sort of reaction. So that's an instance where, okay, maybe I could continue to look for higher targets, right? Now we got a higher high up here that we can eventually target. Let's say you're down here, the market's down here, and you're like, okay, we didn't get any sort of reaction to this high. So that's an instance where you could keep looking for higher targets. And it's the same thing for the other side of the market. If it's targeting sell side, sweeps the sell side, but doesn't show any form of reaction back to the upside, then we could kind of keep looking for sell side. But you never want to target buy side if previous buy side was already swept and is showing a reaction off that buy side liquidity. I hope that makes sense. Any other things I want to go about in terms of liquidity? Yeah, in next video we'll be going over fair value. Oh, one more thing, SMTs. Okay, this is just another form of a liquidity sweep confluence, right? How long has this video been? Hopefully it's not too long. Let me check my parlay really quick, give y'all a little break. Okay. Damn, these niggas 17-8. Yo, Arizona State is why they strapping and shit. Okay, what was I talking about? Oh yeah, SMT. Okay, that was like another main point of this video. So let's see right here. Let's take off market replay. Yes. This is another indicator you could use. I don't really use it. I just look for it. Okay. Did we turn it on? Perfect. Why is it showing only YM? Okay, perfect. Okay. 15-minute. SMT. Some more advanced shit for you guys in terms of liquidity. All right. This is not an SMT, bro. Come on, bro. What is wrong with these niggas? Show me a valid SMT. Sorry, let me look for a valid SMT to give you guys a good example of what the fuck I'm talking about. Look at this shit, bro. Come on, give me a good example, my nigga. Damn. All right, this shit is blowing my shit. Bruh. Okay, basically, I don't know why I can't find an example. This shit is blowing me. I need to find an example for the video. Right, let me just look at the 1 minute, bro. I might just cut this part. I'm not gonna lie. Okay, come on. Perfect. Finally. Okay. SMT, right? So we said we do not want to look for sell side until buy side is taken, right? Not want to look for sell side until some form of buy side was taken. I'm not sure if I really emphasized that yet, but because I said kind of the opposite. You don't want to look for sell side once sell side was taken. But let me get into that really quick. So before we type in the SMTs, you always want to look for some sort of liquidity on the opposing side of the market once that liquidity opposing that side is targeted, right? That kind of sounds confusing as shit, but so when sell side is taken, you want to look for buy side, and once buy side is taken, you want to look for sell side. I kind of explained that earlier, just to reiterate it, right? So let's say we have sell side or buy side, right? So we have buy side. We want this to be taken once we target these areas, right? Okay. Come on, my nigga. All right, so boom. So if you guys are looking at a chart, right, give me 1 point of buy side and give me 1 point of sell side. Again, just to reiterate what I just went over before I go over this SMT, right? Your buy side, sell side. We do not want to target this area if we are bearish until some form of significant buy side is taken, right? This is buy side. This is sell side. Okay, if we're bearish, we want to see buy side get taken out before we target sell side, right? Buy side got taken out. Now you can see it came down and swept sell side, right? Okay, now that's pretty obvious. Now I'm sure I kind of just went over that, but I just want to reiterate it. But okay, now we could see this is you're only able to go against that knowledge if there's an SMT, right? So we see that we left on the 1 minute, we left this high, this specific high right here. Let me turn off this indicator, bro. So you see this high right here? Fuck. This high right here was taken, right? I was not taken on NQ, right? Since this high was not taken on NQ, usually I would be like, okay, I'm not taking any sort of short, or I'm not taking the under for you niggas, because I know you niggas will better understand the under, because y'all niggas be gambling and shit. I'm not taking that short if that high is not taken. But what a SMT divergence is, it's called the SMT divergence. I just call it SMT for short. What a SMT divergence is if SMP, the SMP right here, you guys see on the right side of my chart, if the SMP takes that high, but NQ doesn't, And it could be vice versa as well. And it's just another form of confluence that shows you that your idea, if you are short, has more confluence and it has more strength, that it gives you more confidence that it will go lower, right? So we could see that. Let me reiterate that. When one pair takes a high and the other pair does not. By pair, I just mean the NASDAQ and ES, right? When NASDAQ takes a high and ES does not take that same exact high, because those move in what's the fucking word? In synchronous. Those move in synchronous. That wasn't the word I'm looking for, but they move in synchronous. So if one form takes the high and the other doesn't, you could still use it simultaneously as a liquidity sweep. You could still use it as, okay, that liquidity got taken. So boom, this high on NQ did not get taken. Usually I would be like, okay, I'm going to wait for that to get taken, but I'm going to look over at ES to see, oh, that high got taken on the ES. So that counts. That's an SMT divergence, right? I know that on ES, this got swept. So that means that could just mean that these orders were taken, right? Okay, SMT got taken, the high got taken on ES. So that's valid. Now I'm looking short. Now I'm targeting sell side, right? Now I'm targeting sell side, right? Now I'm targeting sell side, right? Now I'm targeting these equal lows down here. Now I'm targeting these equal lows. So now I know hold on, I'm getting a call, bro. Why is she calling me? Now I'm targeting these lows right here. These lows right here. Now look, back to our example of liquidity. We see that we have these this is perfect example. Now we have relative equal lows too. So when we combine both things you guys just learned, okay, boom, it didn't sweep this high, but on ES it swept, right? Okay, that's an SMT divergence. That's an SMT. So the resting orders were swept. Now I know if it gives me a reaction off that level, now I know I could target sell side because buy side was just swept on ES, creating an SMT divergence. Now what am I looking for? Now I'm looking for sell side. Boom, we have this low. We take a step back. You can see the low. The low is obvious, right? We have an obvious low, right? Now we have, and then we also have the number one liquidity of point of all markets, the number one point of interest in all of the markets, the equal lows. We have the equal lows right here. Okay, boom. Now I know that market wants to either target here, at least here, and the relative equal lows, the equal lows. It's so obvious that, okay, we swept here. Boom, I'm targeting this. Now I'm targeting this. Now you got your Now once you learn how to enter, you got your model. You know what it wants to target. Now you know, okay, I'm going to take profit here. I'm going to take profit at these lows. Right? Let's get it. And you could see once it swept these equal lows, it rejected because this is where everyone got out of the market. This is where the market makers got out. Perfect. All right. I hope that all made sense. Let me see if I can show you guys one more point of SMT skis. So yeah, if you guys ever hear me talking about some fucking SMT, you guys know what I mean now, right? These happen all the time. Is this SMT? Boom. Boom, 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 right here. Now I'm finding these examples quick. We're in a lower time frame, right? We could see usually right here, right? I'm like, damn, bruh. I can't even look for an entry because I'm on NQ. I'm looking, right? Damn, I can't even enter the market, bro. This shit didn't even get swept. It left liquidity up here. It left resting orders. But hold on, let me look at ES. Let me see if ES swept that high. Let me see if there's an SMT. Now you think you know what the fuck you talking about. Now you think you're a real trader. Let me look at ES. Let me take a look at ES. You feel me? Okay, ES took that high. ES took that high. Now you can take your little trend line shit. Be like, oh, I'm a real trader. Let me like these niggas on Twitter be let me write this out. SMT. Now I see a little SMT. Now you could be like, post this on Twitter. Oh, we see a little SMT with ES, right? SMT with ES. Now I feel legit. Now I see, okay, NQ. Now I know that could count as a liquidity sweep. Let me see if we get a reaction off that SMT/liquidity sweep on ES. Now let me see if I get my entry model to the downside and target some lows, right? So now you know you got an SMT/liquidity sweep on ES. Now what you looking for? Now you see that on the 5 minute, right? We have this, let's go back so it looks more clear. On the 5 minute, right? We just formed a SMT with ES, and we have this significant low on the 15 minute, damn near. On the 15 minute, we have this low. I'm like, okay, SMT. I'm going to target the sell side down here because we just took out some buy side. Since we just took out this buy side, I want to look for my entry model. What you guys will learn. Don't rush into it, but you guys will learn soon. Now let me look for my entry model down to this side for confirmation, right? Because we want our entry model with these confluences to work in tandem and look for sell side liquidity because buy side just got swept. And so you could see, boom, even though I just showed you guys this hindsight, this shit works every single day. I'm telling you, that's how I make my money. That's how I make my money. Stupid, Annie. Okay, boom. See, swept it. And now you just made fucking, let's say, okay, I enter with like at least one contract on NQ. I don't trade NQ, but MNQ I usually, because contracts are just worthless, like I explained already. So boom. I sell right here, right? Okay, my target is down here. I'm like, damn. Now, if you got the fucking cojones, you got the balls to hold it all the way to this low, which I'm sure a lot of you niggas won't have yet because it takes time. Now you just made 2 racks, right? You just made 2 racks off of that one move. Even though a lot of the niggas won't held, I probably won't even held that long, but I'll probably target something like that low right here. It's a little more advanced, which I'll get into the next video. But now you just made 2 bands. Now you're up. But hopefully those were some good examples. Liquidity / SMT. Hopefully that made sense. Any questions? Hit the Discord, RTB Trading. Remember to subscribe. Remember to follow us on Instagram at Tradion TR4 DIAN. Tradion. Zay needs to change his fucking Instagram name. I'm not sure what his Instagram name is right now, but subscribe to us. And then his shit is Zaywash, ZAYEWASH. Follow him on Instagram. Follow me on Instagram. I'm gonna catch y'all. Any questions? Hit us in the cord. You guys know what it is. All right, I'm gonna catch y'all later though.